Okay, let's take a look at a couple of problems that will help you with your homework for assignment number 2 in chapter 5. So we're going to look first at exercise 5-4b. So that combines our inventory flow work that we did in the last problems with now kind of a basic income statement and calculating gross margin. So in this case, the company has beginning inventory 90 units at $15 and then they purchased 320 units at $19. So pretty simple thing. So their ending inventory, they have 40 units and they sold 370 units at $30 each. That's what they charged the customer. So it looks here like they had 410 units in inventory, so that makes sense that if they sold 370, they'd end up with 40. Okay, so in the first case here, they want us to use a FIFO assumption, the most popular assumption that companies use. So in that case, the sales are 370 at $30 for $11,100. And the cost of goods sold, again, because this is FIFO, I'm going to give customers the oldest stuff first. So I'm going to give the beginning inventory to the customer first. That's 90 at $15 for $13.50. And then I'm going to have to give them the other I'm going to have to give them 280 to get myself up to the 370. Okay, I'm giving them a total of 370 units. So if 90 come from beginning inventory, the other 280 must come from the units that I purchased at $19. So I do that math and I have total cost of goods sold of 66.70. So I have gross profit of 44.30. The next problem, the next part, they ask you to do LIFO. So in that case, I've got sales of 370 at $30. That's the same. But now I'm going to flip it and I'm going to use the units purchased first. So I'm going to give all 320 of my purchase to the customer, $19. And then I'm going to make up the remainder that I need by pulling from my older beginning inventory. So in this case, I have cost of goods sold of 68.30. Notice how this cost of goods sold figure is greater than 66.70. That's always going to be the case with LIFO when I have inflation. The next thing they ask you to do, and it gives me gross profit of 42.70. So if my costs are higher, my gross profit is lower. Okay. So the last one they ask you to do here is weighted average. So in that case, sales are the same. Now my average cost per unit is 370 at 18.222. So I figured out that 90 times 15 plus 320 times 19, so I take the total amount of value that I have in inventory and divide that by 410 units. I get 18.222. So that gives me cost of goods sold of 67.05, gross profit of 43.95. Again, we'll see this figure here, 67.05, is going to be in between 66.70 and 68.30. That's always going to be the case. So it's a good double check to make sure you didn't do your math incorrectly. So a dollar amount difference between net income between using FIFO and LIFO is $160 lower with FIFO. Again, that's always going to give us a lower profit so for that. And then determining the cash flow. Well, the cash flow is the same in any of these. So it's the money that I spend on the inventory purchase and the money I receive from the sale. So it doesn't matter which flow method we choose, the cash is going to be the same. Okay, the next one I want to look at is a little bit more complicated. So now we're going to look at ending inventory, and we've got a few more purchase transactions here. So it says that I purchased 4 different times at increasing prices here. And during the year, I sold 800 shirts for $25 each. So we want to compute the cost of ending inventory. So first of all, I figure out the total dollar amount that I've got. I've got 980 units available for sale with a cost of $11,060 as a total. And so for FIFO, if I sold 280 units, or I sold 800 units rather, I'm going to be giving the customer all 300 of the first purchase. I'm going to give the customer all 400 of the second purchase, and I'm going to have to give them 100 of these 220. That's what will get me up to 800. So my ending inventory is going to be the other 120 from my July 21st purchase, and then the 9/5 purchase of 60 units. So my ending inventory will be 2760, 180 units. 180 makes sense because I bought 980 and I sold 800, so 180 should be what I'm left with. Now with LIFO, it's going to be the opposite. I'm going to work from the bottom up. I'm going to give the customer all 60, all 220, all 400, and then I'm going to have to dip into this level here for 100. I'm going to have to take 120 units out of there, which should leave me with 180 of my original inventory at $7 for $12.60. So again, I have 180 units left in inventory. I'm just now assuming that they're the oldest ones, okay, because I gave the newest ones to the customer. So that's my inventory value. And then with weighted average, I'll take 11,060 divided by 980, that's 11.286, times my 180 in inventory, 2,031. Again, this number is going to be in between my LIFO inventory and my FIFO inventory, always. So hopefully that's helpful. If you have any questions, please send me an email. Thank you.